Good evening. Welcome back, guys. Good evening. How are you all doing? I hope it was a great day. Like I said yesterday, that I wasn't going to trade today. Well, I did not engage today with the market, right? Although I did not have full time to study, to look at how what the market is doing and how it is playing out. But I think with the price delivery for today has given me a clue and an understanding of our next or major draw on liquidity, which is this price side liquidity. And if we're going to go higher, maybe we may come for this or this. But currently, tomorrow, I'll be looking forward to this buy side liquidity as my major draw on what liquidity. So what we are going to do is we're going to measure from this high to this low and see where the 50% of the range is, because we want to engage. If we want to be a buyer, we want to engage below the 50%, right? So there is no trade if we do not come below this area. All right. Oh, sorry. There is no trade if we don't come below this area, this particular area, because this is the range between the high and the low. Now, anything above here is premium, and anything here is discount. We want to buy at discount level. So, this is hourly though. So let's go to our daily chart, and we're going to start explaining from the daily to the hourly, like we normally do. I don't know why my laptop is trying to be faster than its shadow. Okay, so welcome back, guys. This is the daily. Sorry. Okay, so this is the daily contract for Euro US dollar, and today is Wednesday, February 2024, which is the date of February 2024. Now, the Euro US dollar daily contract for Wednesday, 28th of February 2024 contract deliver lower, sweeping sell side liquidity and tapping into the daily world bullish um, proportion block. Sorry, the bullish breaker, which is this candle. All this relatively black candle, which is this two candle, is a bullish order block. So the high is here. We tap into that bullish order block, which is a bullish breaker for 4 hourly contract. We tap on it and price rally higher afterward, leaving us with a long week low, and we mark out the midpoint of the week of the candle week, which is this. And so we are anticipating for euro to stay above this price, so above this low, which is 1.8160, a big figure, right? So we want to see euro stay above 8. We don't want to see it come below 8. So, and our major tiny draw on liquidity is this high, as I already indicated, right? So which is the the Tuesday high, Monday, Tuesday, Wednesday, which is the Tuesday high. So that's basically on it. Then it is very interesting price move in euro today, as it has swept the sell side liquidity and providing a confirmation for a bullish market condition for tomorrow trading, right? Because of yesterday our bias is not fixed, right? What I mean, because I told you guys yesterday that we are going to come for this low before we come for this high, or we're going to come for this high then we come for this low. Now we have taken this previous day low, not only that low but the relatively equal lows. Look at how all these days are lining up together. We have taken those days. Now we rally back impulsive, which shows that it's a sweep. That move is a sweep on liquidity. So that is alright. So casting forward, sorry, with the price delivery for today on euro, today lead to the formation of what, a long candle wick lower in price, which the consequent encroachment of the wick will be the ideal breaker for a bullish projection and a support to price. Now casting forward, I am anticipating for a bullish price condition on a daily price, and I am seeking buy side liquidity, which is previous day highs, and also using the consequent encroachment of the candle week of today candle week as a potential price support. Basically, it's everything I've just explained on the hourly, on the daily contract. So let's go to the XY daily contract. So this is the dollar index hourly contract, and as you can see, price has closed, and also the DXY is showing that price has eventually sweep below, taking out all this buy side before rallying back. If you look very well, you see that we did not close above this wall opening gap. We just wig into it. And if you look at all the market that has priced into that volume imbalance, it's all, maybe this one price wig into it and go back. Same here, wig into it, go back, wig into it, go back. So now that we've wig into it, it's a more confirmation that we're going to see what lower prices. When we open, we're going to retest on it. Then price is going to use that to I'm projecting for market to use that to price lower, take out this sell side liquidity. I don't know how far can it go. We might come for this, but my initial currently now is this Tuesday high. Yeah, this Tuesday low. Sorry, it's a Tuesday low. So that's it basically for the deal contract on DXY. So this is the Euro US dollar 4 hourly contract, and as you can see, we see how market respect this word bullish breaker, 4 hourly bullish breaker. We have retest on it and we see how price has rallied. Now this particular line is the daily week consequent encroachment. The daily week consequent encroachment. We can see how market is. I don't know why you are rushing to. All right. So we can see that uh sorry, I was trying to talk to someone. So we can see that the 4 hourly contract will price into the bullish breaker and rally higher impulsively. Now we are on this current price range. And if we also did the same thing, we're going to see that we have to price lower in order to accumulate more long position to go higher. So I have this statement here. The Euro US dollar 4 hourly contract shows nicely how price how nicely algorithm deliver price in today trading. Now on the 4 hour, we can see that euro price into the 4 hourly bullish breaker and reprice higher, which also swept what sell side liquidity. This sell side liquidity is also swept. If you look, we also swept all this liquidity, which majorly the catalyst that enforce this move. Now, casting forward, the algorithm is already repricing into a higher time frame worth buy side liquidity now, which is a daily world highs, and I am anticipating the daily candle week consequent encroachment of the week to be supportive to price. which is this consequent encroachment. And looking at the 4 hourly contract, you will definitely have no reason to expect price to come lower, right? So that is it. And we don't want to see price. If price go below this area, then our project or our analysis is wrong, right? That is if we have not taken this high and price come lower. But if we take this high before we come lower, our analysis is right. Know the differences between your target and your entry, what disqualify a trade. Because already if we price above this high, that trade is disqualified. There's no longer any reason to trade except you are looking for or you are looking to chase price. Because if we price below here, even though we are coming here, there's going to be a short time retracement before going there on a normal and a more instant days. Okay, because some days we just go and continue going, but majority of the time price will go and retrace before going or before continuing the smooth. So so this is the XY 4 hourly contract, and also same thing is showing here. We have swept this buy side and price rally faster and break come back into this range. Yesterday I was telling you guys that if we price above it, I want to see retest before continuation. But what this one did today is not a retest, rather it's a liquidity sweep and a continuation in price. Okay, on a higher time frame or liquidity sweep, which is what daily and weekly what liquidity sweep to revise price into a specific what direction or a specific buyer. So we are looking towards this sell side liquidity, and we want to see we don't want to see market go above this one opening gap high, as the opening gap high is also at the same price with our what uh, week or candle week consequent improvement, and that's why we did not include it on price track. So this is the Euro US dollar hourly contract. So hey, I was explaining something on the XY where I was mentioning that the fair value gap, sorry, on the XY, it has not been tapped, and if we tap, if price rally higher and tap it, there is a higher chances of price what coming back lower and taking out what sell side liquidities on the XY. So on Euro, we're going to see, I want to see this low taking, then price gets into anything below this area will be a price signal, and our stock will be below this what daily way consequent encroachment. The Euro US dollar hourly contract shows how perfectly price is distributed into day what trading range. Now the daily profile is an obvious 4 o'clock AM New York local time as the low of the day that price into the world 4 hourly world bullish breaker and price rally higher afterward. The high of the day is formed at 12 o'clock PM New York local time that price into what? That price higher into the 4 hourly world bearish order one sorry into the 1 hourly world bearish order block and price rally back into the range. This particular candle formed the low of today price, which is what 4 o'clock what AM New York local time what candle formed the low of today, and the high of today is from at 12 o'clock PM. Alright, so that is it for today price delivery for the XY. Sorry for Euro. So let's go to the this is the dollar index what hourly contract, And what I'm looking for is I'm expecting price to go higher above this 4 hourly inversion or above 4 hour or fair value gap. We have a 4 hourly on tap fair value gap here. And also, if I want to see price come into it and use it to price lower. And also, if we measure the price from here to here, we're going to see that we are at what, a premium price. So if the XY is at premium, there is a higher chance that the XY is going to reverse, and euro will not get a chance to trade into what, a discount price in order for us to be a buyer. All right, so having this factor with you, that will not make you to be afraid of what, taking any decision going forward in this market. And please don't risk too much. And I am glad to say that since 2 weeks now, I have not been able to have a confidential alignment with my setup. Right, what I mean is that there is some statistical edge you will see in the market, and you will know that at least, even if you are wrong, the probability of you getting taken out is very low, rather than engaging on a statistical edge where you know that the statistic of you being a winner is low, while than the statistic of you being what, being in a loss. So this is a very an ideal day, and if Thursday did price lower, then I'm anticipating for either Friday to price back into the range or continue the lower prices for us to get off of the market to get what, into this what, higher time frame or sell side liquidity. So that is it for the XY. Let's go. Now coming to the euro as well, we can also figure the same thing on the euro. I want to see price get below this area right before engaging or anything. And also, if we want to look at this area, we have a what, a fair value gap or an inversion fair value gap at this price. So if we price below, we respect that, and if the SY is not willing to go that far, we're going to use this area to be a buyer to deliver us what, higher price. So this has come to the end of this video. I hope this was insightful. You really get the rightful information from this chat. Thank you. God bless you, and see you tomorrow.